Hello, this is Sasha Bretz with Midland IRA. Thank you everyone for joining and for your patience. So I think we were just going to give a few more minutes to let everyone get settled in. And I do want to go ahead and say if anyone is experiencing issues with sound or video at any point during the presentation, that you should try refreshing the page, and that does typically take care of any technical issues. And also at the very end of the presentation, there will be an open forum for questions. So I'm going to go ahead and get started. So hello, once again, welcome everyone. Thank you for joining us today. Midland IRA is a self-directed IRA administrator and custodian for alternative investments outside of stocks, bonds, and mutual funds. So today we are going to have a guest speaker, attorney Jeff Watson, and he's going to share his experience with notes from a legal perspective. So notes are a common investment held by a number of our clients, and so we organized this webinar to offer something of value to you. Jeff joined us for a panel discussion in the past, and we were impressed with some of his structuring options that he presented. So we are looking forward to hearing what he has to say today. Again, after the presentation, I'll be reading your questions for Jeff to answer, and we'll get to as many as we can, and be sure to do follow-up with everyone. So just, okay, it looks like Jeff was able to join us here. So Jeff, I am going to be moving the presentation along for you, and I will ask you that you direct me to move forward or go back as needed. And I think we are ready to begin. Whoops, just a moment. I think we had him drop off, so give us just a second to work out some technical difficulties. So we will begin very soon on the due diligence presentation by Jeff Watson. I guess just a little bit of an intro for Midland clients existing or prospecting. Again, promissory notes is one of the many types of alternative investments that you can hold with a self-directed IRA. And Jeff, I think you're with us if you're ready for me to begin.
All right, try me again.
All right, nice to have you, Jeff. Thanks so much for your time. So I let everyone know that you are an attorney giving your legal perspective on notes as an investment. You'll be doing your presentation on due diligence, and I will try to move along at a good pace for you. If I need to move forward or go back, just let me know, okay?
All right, so it's just going to be audio only?
So our screen is being shared with our viewers now, and so they can see your title page here, Due Diligence by Watson Invested. So I can move to the next slide if you're ready to begin. So our our attendees are ready and with us now.
All right, let's kick this thing off then, all right?
Great, all right, so
sorry about the delay.
All right, Jeff, are you able to see that first slide, your disclosure?
I am now able to see it, yes.
Great, all right, did you want to speak on that?
We are live, correct?
Yes, sir.
This is the first time I've used this particular format, so it's kind of new to me.
Jeff, we're all learning new technologies right now. This is crazy times.
It is crazy times. I for years, I was fairly competent on GoToWebinar, and I've gotten fairly decent on Zoom, but Livestorm is brand new to me. So folks, let's just have some fun with it. All right.
Great.
So the disclosure, yes. I am providing this information providing this information for your education. I'm not providing legal, accounting, tax, or other professional advice, nor am I providing psychological advice at this time. If legal advice or other expert professional assistance is required, the services of a competent professional person should be sought. And I want to talk about an area that is really passionate for me, probably once a week. You can go ahead and roll the next slide. About once a week, I get an email or a phone call from an IRA account holder that has done a deal, lent some money, and they didn't do it the way I would have wanted them to do it. And now we got to clean stuff up. And you're like, well, hey, who are you to begin with anyhow? Well, I've been practicing law now for 29 years here in the state of Ohio. Next year will mark my 30th year. I'm going to get licensed in Texas later this year. I've had the opportunity to serve as general counsel to some pretty interesting organizations like Real Flow out of Parma Heights, Ohio, National RIA out of Cincinnati, Ohio, Note School out of Southlake, Texas, National Wealth Builders out of Dayton, Ohio. I've been a real estate investor myself on a part-time basis for 27 years. And the majority of my new clients today are investors using self-directed retirement accounts. And I love doing those kind of transactions, helping them do deals the right way, the smart way, and a safe way of doing it. A couple other things about me is I have been able to change the law in the state of Ohio 5 times, 4 times litigation, 1 time through legislation. I've influenced national housing policy twice on distressed real estate transactions. And I do a newsletter that goes out about twice a week when I'm in the productive writing mode and I don't have writer's block. And it's read by about 18,000 people when it goes out. And so those are some of the things about who I am, what I do. I have been a self-directed retirement account investor for a number of years. And so it lets me tell you that self-directed investing is where you, the account holder, hence that word self, makes the decisions and investments on behalf of their retirement account through a qualified trustee or custodian. And there are a variety of accounts that you can self-direct, like a Roth IRA. And for just historical purposes, as well as for brevity, when I say SDIRA, I'm referring to self-directed retirement accounts in general, be it a Roth IRA, traditional IRA, 401k, HSA, CISA, SEP, simple, but I like just call it an SDIRA, just a whole lot easier. And folks, you have diverse investment opportunities. We can put our money into things a whole lot different than stocks, bonds, mutual funds, and ETFs. So we like to do that. Now, what we've got here today is where I'm going to spend some time talking about an area of self-directed investing that I love to focus on. My focus is in the area of lending. I love to be a lender, like to be a secured lien holder. And I've got to ask you a question. So many times I encounter people who have made loans, made massive investments, $100,000, $200,000, $500,000, and they've not spent time qualifying their deal partners. I mean, I remember reading a very tragic email a few years ago of a guy who sent $1 million to a man that he met at a seminar thinking the guy was a good guy. And that $1 million kind of evaporated because the man's business model wasn't well suited and he hadn't done his due diligence on him. So stop blindly investing. And we want to spend more time on our deal partners or as much time on them as we do on our tenants. So let's get into some of the prerequisites that we have to do here. All right. So we need to do due diligence in a couple of different areas. We need to do due diligence on the other party, the counterparty, as we would commonly refer to it in a transaction or in a trade sequence. So from your real estate experience, most of you know how to analyze a deal. Most of you can always improve on how you analyze a deal. I know I can. But do you know how to evaluate a managing investor? Do you know how to evaluate somebody that's going to be borrowing your money and putting it into an investment? Are you as diligent with them? Do you invest the same energy evaluating that new deal as you would with managing a new investor relationship? Are you willing to ask the hard questions? Because if you're not, then probably at some point in time, your hard-earned retirement dollars may go out and not come back the way you thought they would. And that's something we want to avoid. That's something that we need to avoid. We didn't accumulate this money tax-free just to give it away as a result of making a mistake in a one-time quickie deal where, oh, he seemed like such a nice guy, but the deal had to fund right away, so I didn't get my due diligence done. I figured we could sign some of the paperwork afterwards. No, don't ever do that. Folks, if you're going to be in this space, if you're going to really wisely grow, manage, steward, and invest your self-directed account, you need to look for long-term relationships, not a one-night funding partner, okay? All right, so I say that in order to make sure I keep people's attention here, okay? You've got to get personal. If they're going to have access to, if they're going to have control of your money, you need to get personal. It's time to ask some questions. What would I find if I ran a criminal background check on you, Mr. Borrower? Hey, Mr. Borrower, I understand no one's perfect. So what is a complaint that you've previously received from other people that you've borrowed money from? Hey, Ms. Borrower, I understand nobody's got it all figured out, but do you have at least 2 years of business tax returns for me to look at? Oh, you're kind of new in the space as an investor? Well, how about 2 years of your own personal tax returns for me to look at? I want to make sure you've had a job consistently. Can I see a copy of any investing contract you have where you're buying the property? Or can I see a copy of your joint venture agreement? Oh, by the way, do you control any other entities besides the one that you want to use to borrow my money? If so, what are they? And I'm going to camp on this one for just a minute because I've seen this deal happen and it's a very slippery deal. A seemingly savvy investor comes up to a private lender and says, hey, listen, we got a chance to buy this house from this company. We got a chance to buy it for like 50 cents on the dollar. Okay. And so here, I need the money. I'm kind of cash light, but you're cash heavy. I need the money. We can go into this thing. I can put you in as a good lien holder on this deal. What they didn't realize, because the lender didn't do their due diligence, is that the entity that was selling it to the borrowing entity on paper was owned by the same guy. So instead of bluntly saying, hey, listen, I need to do a refi loan on this thing, instead he smoke and mirror masked it as if he was buying it brand new as a fix and flip, when in reality it was something he'd already had in his old inventory and he was just not being willing to be honest. Now, guess what happened with that deal? Yep, you're right. It went sideways. Okay? It went sideways. So always ask, what other entities do you own and control, and in what states are they? And if you see people with a bunch of entities in Nevada and Delaware, but they're doing business in Illinois, pucker up. If they're doing business in Wisconsin, but all they have is Delaware and Nevada and Wyoming entities, pucker up. There's a reason why. You've got to figure it out. That's something to be worried about. Okay? Next slide, please. So you've got to dig deeper. You've got to search the various Secretary of States for other controlled entities. You can search by the name of the person that you're dealing with. You can run their name through indexes on various Secretary of State's websites and see what they own. Not, excuse me, not all states will do that for you, but most of them will. Google these people. Check them out. What are the entities that they're affiliated with? What are the fan pages? What are the business pages associated with them? What names do they have in their letterhead? What names do they have on their email? How many different email addresses do they have? What's going on with all those different accounts? And search for their both success stories and failures on social media. Man, if they're always crushing it, if they're always having massive grand slam home run deals, be worried. But if they can admit to you, like I can admit to you, hey, I've made some bad loans. That's what's made me get a lot better at this. I've made some deals where I didn't get all my money back. That's what makes them a better investor. If they're willing to admit that, they're honest, they're human, you can dig a little deeper and see if it's just part of a head fake or if that's really who they are. All right, more due diligence on the investor borrower, on the person who's going to access and control your money. How many deals have they really completed? Or are they borrowing money from you to fund their fourth rehab, but they still haven't finished their first rehab? That's a problem. Are they a full-time investor or are they a deal marketeer? Are they just trying to put stuff together where they can make a spread and get out of the deal and leave you in a deal with somebody that you don't really know and you haven't vetted? Be careful of that. What is their overall reputation? Birds of a feather flock together. Who do they hang out with? Okay. Where have they gone and gotten any of their investment education and training? Besides the School of Hard Knocks, what other seminars do they frequently go to? Who do they consider to be some of their mentors? Where have they learned stuff from? There's a man that I learned a tremendous amount from him and from some of his proteges. His name was Jack Miller, the late Jack Miller. And I would frequently tell people that if you didn't know Jack, you probably don't know jack about real estate investing. That man has taught more current modern legends than anybody else I know. I'm proud to say that I've sat in a few of his seminars and had him blow me away. Jack has been gone from us for about 12 years now, but I learned so much from him so quickly. And then so many of his close friends are still teaching active today. So that's the kind of stuff you want to look for. Who's out there? Who are you learning from? Are you learning from someone who's been through 2 or 3 market cycles? Have they been around the block since the Resolution Trust Corporation era? Have they been through the dot-com boom and bust? Were they here for the 2008 through 2011 crash? Oh, by the way, do they have an accountant and lawyer on retainer? Do they really run their business like they're supposed to? Or are they just kind of like Google Docking their way through it with whatever they can find for free on the internet? That's an issue. I'm going to camp here for just a second, and then you can kick the slide forward in about 15 seconds, but I've got to share this. Do not use legal docs that you get for free off the internet. They are worth exactly what you've paid for them. A good promissory note that you get from a lawyer who understands self-directed IRAs, self-directed IRA investing is going to be worth far more than you can imagine in the event of default or something going wrong. Get good paperwork. Get good paperwork for your notes. Get good paperwork for your deeds of trust or your mortgages. Get good stuff and use it. All right, some more references. What is the longest funding relationship that you have? How can you verify that? How many of the people who have lent you money and that you have paid back have relent you money? How many people that you have invested with you in the past where the deal has come to fruition got a written remittance report and breakdown of their money? How many of them did you pay back according to the payoff instructions that they sent to the title company? Great. Did they then relend to you again for the next deal? Wonderful. That's good. If this particular borrower, if this particular investor borrower has repeat customers that they will let you talk to, that is a really good step in moving your due diligence forward. You want to get references from current and past investors. You want to find out why somebody didn't reinvest with them. Did they not reinvest because they needed the money for something else? Did they not reinvest because they didn't get paid back on time? Did they not reinvest because the borrower didn't stay current in communication with them? What was going on? You need to know these things. And by the way, just don't take it in word from the person who's trying to borrow your money. You want to follow up with the people who actually they dealt with. You want to try and get it through an email, something like that. You want to have something to track back on. All right. Okay, so let's dig a little bit deeper into the reputations of the references. You're saying, well, Jeff, you sound kind of paranoid. Yes, I am. I remember sitting at home one evening watching an internet marketing webinar, and this guy was talking about how he created, through a separate company, a series of web pages managed by overseas VAs who would all talk about how wonderful his information product was. And I thought, that's downright deceptive. So folks, how well do you know the references that your borrower gives you? What research did you find on them? Are they really, truly a good reference, or are they their kid brother-in-law? You know, is it somebody who's done business with them from an arm's length perspective, or is it somebody who's hoping that they get the money from you so that then they can get paid back? Is one of those things, okay? We want to look for that. Check with your local RIA, check with real estate agents, check with brokers regarding their experiences with this particular borrower. And by all means, the public record is a tremendous source of information. You need to run that person through Google. You need to run them through Pacer, Pacer, in all caps. It's an online government website, difficult to navigate till you get used to it, that has tremendous information on lawsuits, bankruptcy filings, and a bunch of other stuff. But you need to do that and dig into that. And our slides went away for a second here. There we go. They're back. All right. So let's roll to the next slide. Yes, Pacer is a government-operated website. It's all caps, Pacer, all caps. It costs you 10 cents per page that you download, but it is a treasure trove of information, Gabe. Thank you for asking. All right, so now we're going to talk about the other half of this due diligence. We're going to talk about doing due diligence on the collateral, on the asset backing up the promise to repay you. Okay? All right, so digging into this, remember, you do not want to make a loan on a property that you wouldn't want to end up owning. If you wouldn't buy this property for the amount of money that you're lending against it, for the amount of money that are for any senior liens, including back taxes and unpaid taxes that aren't getting paid, for the costs of foreclosure and getting it back, if you wouldn't buy that house for that total sum of money, don't do the deal. Don't fund that loan. Know what your criteria is. Know what your criteria is. Do you only want to fund deals to a certain LTV? Know what that is. Do you only want to fund deals where there's certain values? Know what that is. But if you're going to lend money, let's get into this. The valuation of the collateral. What's the average home value in that particular area of town, that subdivision? What's the average rent? Are there any recent valuation variables? Has anything happened that's changing things around? In that particular area, what percentage of the market is owner occupied? What percentage of it is vacant? What percentage of it is rental properties? The demographics. What percentage of the demographics in that community are married couples? What percentage is white collar versus blue collar? What's the average annual household income in that neighborhood? Does that average household income support getting a loan to buy the house for what your borrower says is the after repair value? If your borrower's asking you to fund a house that the after repair value is going to be $600,000, but nobody in that neighborhood is making much over six figures, that's a problem. That's a problem. Okay? So what's the best website, Denise asks? You have a number of websites that you'll have to use. There is no one place to go. You've got to pull a lot of these threads together. My team and I will do these for clients, We will probably pull from about 15 to 20 different resources that are all proprietary to us. Some we have to pay special subscriptions to, but we'll do these for clients for a reasonable fee. If you want to, we can talk about it offline later on. But other important things you need to know is, what are the crime statistics? One of the key indicators of a neighborhood going the wrong way, unfortunately, is the number of registered sex offenders living within a radius of the subject property that you're lending against. Another key thing is, what are the schools rated in that area? The best predictor of a neighborhood's ability to appreciate is the rating of the high school. The higher the rating of the high school, the higher the ability for that neighborhood to appreciate. And then lastly, any major corporate or factory expansions. For example, Huntsville, Alabama is on fire with all of these companies coming in. There is an area on the north edge of Dallas, Texas, in what I'll call Prosper and Frisco, McKinney area, where they're building a new college campus there. Those are the kinds of things that just keep going. There's a lot of websites that you can use. And you need to have several of them. Like I said, my firm, my team, we probably use between 15 and 20 different websites and resource materials just doing this kind of due diligence on a particular loan for a client. These are all the things that you need to think about. The better analysis you do on the asset, the greater the protection you know for your loan. All right, so you've got to understand a couple of things. How well do you know the market? How will you evaluate the values? Okay. Does the offerer, the person wanting to borrow your money, does the person wanting you to get into this joint venture deal, does this person wanting to put you into this note investment package, do they really have the right to buy and sell the asset? Do they really have the right to secure your interest? Who is going to be the owner of record of the collateral? Who on the county record is going to be the owner of the collateral? Because that's the person that has got to be giving back to you the mortgage, the deed of trust, the assignment of the mortgage, the assignment of the deed of trust, the allonge on the note, signing the new note, guaranteeing the new note, any of those, all of those things that are appropriate, okay? And then lastly, who is going to be servicing this loan? Are you going to be self-servicing? If you're going to be self-servicing a onesie, twosie loan made out of your IRA to a commercial lender, well then, you can probably do that. But if you're going to be making a loan out of your IRA that may end up with a residential occupant borrower, you want to make sure that that loan is being serviced by a licensed servicer, licensed to do business in the state where that collateral is located and that property is located. So you've got to know these things. You've got to dig into it, okay? It's not as simple as just filling out the direction of investment forms and submitting it to your custodian and sending your money off and then praying it comes back. No, you need to do your due diligence knowing that you're putting it into a good deal with good people, with good collateral, with good documentation. That's going to give you the best rates of return. That's going to give you the most security. That's going to be where you get a return of your principal and a return on your principal.
Jeff, I'm just going to add something really quick to that last part about the loan servicer. So your IRA custodian, so Midland, for example, is most likely not a loan servicer. And so don't fill that role with your IRA custodian because they probably don't do it. They're not tracking payments. They're not making sure that the interest and principal are being, we'll do record keeping, but they don't do the servicing to the loan. We're not going to reach out and say, hey, Bill didn't pay his mortgage this month. So if you're not going to do it yourself, like Jeff said, make sure that you have someone who's licensed to do that for you.
So you make a really good point regarding this. And we're talking about self-directed retirement accounts. The self is you, the account holder. You need to be the one tracking the payment. Did you get it on time? You need to be the one informing your custodian, informing Midland, hey, on this payment that came in, this much goes to principal, this much goes to interest. You need to be the one tracking that. You need to be ticking it off on the amortization table that you should have prepared and printed out at the time you originated that loan. Okay?
Great. All right.
All right. So this slide looks like it was a teeny bit out of order because we're talking about collateral again. But I want to talk now about some lending, Roth lending rules, because we're talking about doing this out of a self-directed retirement account. And my favorite is a Roth IRA. So the first question you always have to ask yourself is this a prohibited transaction? And I can tell you that loans are not a prohibited transaction even of themselves. Is it feasible? Well, is it something that can be documented and tracked and traced so that a custodian who is following your written directions can understand what it is that you're wanting done? Then it's probably feasible. Can it be documented? Are we reducing everything to writing? So in exchange for me instructing the custodian to send money out, I'm getting back a promissory note fully executed. I'm getting back a recorded mortgage or deed of trust. The note has a personal guarantee with it. The deed of trust has an assignment of rents built into it. I'm probably got pretty good documentation. So the key questions are the other parties involved non-disqualified? That's a key question. Because yes, you can make a loan. It's a legit thing to do to make a loan, but you can't make a loan to your spouse. You can't make a loan to your siblings. You can't make a loan to your parents. You can't make a loan to your business partner. You can't make a loan to somebody else. Yeah, your siblings are okay, which is a unique exception in the code, but you have to make sure that you're making a loan to somebody who is not disqualified. And then always the question of, can it be titled? Is the asset that is serving as the collateral, can it be titled? Can it be registered, tracked, and so on? Is it a vehicle with a VIN? Is it a mobile home with a VIN number on it? Is it a house with a parcel number? What can we do? Those are the things we want to pay attention to. Next slide, if we could. All right, this is the pinwheel. When you manage and funding investing, we've got to look at a lot of things here, okay? The amount of the loan. How and when will the loan be repaid? What's the rate of interest that you're charging? You need to know these things. And let me tell you something. This is a safeguard. And for everybody who's on the call, I want you to listen to this carefully, because this may be the most important thing I say. I would rather you make 10 loans of $10,000 to 10 different people than for you to make one loan of $100,000 to one person. You have spread your risk way apart, making 10 smaller loans. The other thing I'll tell you is never, ever, ever lend all of the money out of your account. Always leave enough money in your account to keep the account open, to cover the fees associated with having that account, and to cover the cost of any surprises that may arise when one of your borrowers stops making payments. So the next thing is, with that note and that loan, is there equity participation? If so, how do we describe it? How will the participation be valued? What do we do there? Okay, we want to check those things out. We want to know on the note, how long is the grace period? If the payment's due on the 1st, when does the late fee kick in? What happens if the investor borrower defaults? What do we do? What's the procedure if we have to foreclose? How do we do that? Do we know how to foreclose? Do we know how to find someone who can foreclose? And that should be able to do that now, with a lot of lawyers that used to do foreclosures looking around, waiting around for somebody to come back so they can do it. All right. If you're putting your money into a large pool where it's buying a bunch of notes, and that was very popular a few years ago, do you as a funder have access to the servicer who's tracking all of these notes? How often will you be updated as to the performance of these investments? When will you have electronic access to the documents? How long till you get back your note the original note. How long till you get back a copy of the recorded mortgage? If you're lending on a rehab deal or someone's borrowing from you, you want to make sure that the title company or closing attorney handling the transaction has received, reviewed, and agreed to your written closing instructions. Okay? You want to be in control of how your money is being dispersed. We can go ahead and move to the next slide. Collateral. The collateral, the collateral, the collateral. We want to always know the collateral because in the worst case scenario, the borrower defaults, the borrower gets sued, the borrower files for bankruptcy, and your only remaining recourse is against the collateral securing the note. So you want to make sure you've got a good description of the collateral. All of it. You want to make sure that all of the collateral is included in your security instrument, in your note, in your mortgage, in your deed of trust. You want to make sure that the collateral is an area that you care about, okay? I don't want to have collateral in certain rundown neighborhoods. I want collateral in up-and-coming neighborhoods. What's been the history of the collateral? How long has your borrower owned it? Before your borrower was getting it, what was going on with it? Was this a piece of property that has been flipped 2 or 3 times or assigned 2 or 3 times before your borrower is now getting money from you to go ahead and take title to this? That is something that we want to not do. We don't want to be the person funding this daisy chain series of events. Go ahead and hit the next slide. Points. Are you charging points? How are they calculated? Are they built into the loan? Are they collected up front? Are they taken at the closing? The draw schedule. So if the borrower is borrowing not only from you the amount of money that they need to purchase the property, but also rehab the property, how is the draw? How are the draws being done? Do you have a specific separate agreement as to a draw schedule signed by your borrower that you and your custodian can follow along with as to when additional funds need to be released to your borrower? Does your mortgage, does your deed of trust fully encompass the full amount of both the purchase and all of the draws? Is your note for the correct amount? Is your note drafted to cover the draw schedule? All of these things are important. So documents are huge. Make sure that your borrower pays. Folks, listen to me carefully here. Here's the next golden nugget that's going to make it worth the time you've put into this call. Make sure that your borrower pays at closing all of the costs associated with getting that money to them. The wiring fees, the document preparation fees, the due diligence fees, and the processing fees that might be charged on getting that money from the IRA to the title company. You, the account holder, should not be bearing those costs. That is not part of what you're making with your interest. That is a cost that the borrower has to pay because you're putting your capital at risk. You're entitled to a rate of return over and above the cost of putting the money out on the street. All right. Amortization schedules and payment schedules. In the note, do we know when the first payment is due? Do we know when the last payment is due? Does the borrower have the right to prepay? Is there a prepayment penalty? What are the dates that the payments are due? How many payments are due? Is there a balloon? All of this stuff needs to be thought through and spelled out in the note. Okay? It needs to all be spelled out in the note and thought through. Any other questions? I think that covers it all there. And I'm trying to keep my eye on the clock. This is important. This is important, okay? And jump in if I've got the wording wrong on this, then correct me if I'm wrong. But you need to make sure that the note and the mortgage and any of the other documents are properly titled Midland Trust Company as custodian, FBO, or for the benefit of the name of the account holder and then the Roth IRA account number. You notice I'm biased towards Roth IRAs. If it's an HSA, take out a Roth IRA and put in HSA and put in an account number. Now, somebody who's always come back to me and go, well, Jeff, for privacy purposes, I really don't want my name on the mortgage. I just want it to be Midland Trust Company, custodian, FBO, benefit of my IRA account number. And I'm like, I understand why you feel that way, but I really want my money back. And so I'm really willing to let my name be on there in addition to the account number. So it's very clear as to whose money it is and who it comes back to and what account it goes back to. So I'm not going to go on the side of the tinfoil privacy hat. I'm going to go on the side of the tinfoil I want my money back hat. Okay? I want to over document so I can be found and get my money back. Remember, you've got to have a properly completed direction of investment form. With that, you need to give Midland a copy of the promissory note, the mortgage, and the deed or deed of trust. You need to be able to clearly say what's the start date of the payments, what's the amount, who are the payments made payable to, where are the checks being sent to, when is the note due in full. And please, 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 please understand this for me. Do not make loans to borrowers that you do not know without making sure that they're making at least monthly, yes, monthly interest-only payments. I want you to have that. I want your loan to be on the top of their brain every month when they have to write you another payment check. Okay? All right. Steve asked the question, suppose I have money now and ready to do the note investment. What websites to search for the firm or the company for the note or loan investor? Google them as to who the prospective borrower is, where you're ready to, who's the counterparty, Steve? Start searching them out. Use Google, use some of your other favorite search engines. Obviously, look them up on Facebook as well and see what you can find out and begin to go from there. And by the way, just out of curiosity, did they give you a borrower loan application? Did they give you a hard money lending application where you got their full name, you got their address, you got their business address, you have their business tax ID number, you know the date that they were performed in business, you have their own date of birth, you have their own social security number of whoever's going to guarantee the note? If you're not collecting that information up front, you're not getting everything you need to protect yourself. I'm sorry, you want my money out of my retirement account? I'm going to get your name, date of birth, and social security number and your business EIN number. Yes, I am. Or you don't get my money. It's my money. I make the rules. I'm so tired of, and thank God the market is shifting, because the way the market is shifting, now there will be smarter lenders that stay in business and better borrowers that have stayed in business, and all of the people playing the shady cat and cutting loose and cutting corners and not doing it right, they're the ones that are going to be the first people wiped out in this downturn. So I'm happy about it. All right, roll to the next slide. Yes, once again, we're coming back. On the note, what's the interest rate or participation terms? Are they clearly written out so that somebody else, a total disinterested third party, could read it and go, yeah, I see how much they're supposed to be paid back? Is there a clause allowing for a copy of the note in lieu of originals? Okay, so then that way you can use the copy when you only need to show the copy, and you don't have to give up the original unless you have to for a foreclosure. Did you prepare an amortization schedule that matches for when the loan was funded? Is the default clause in the note very clear? Are there any extension terms, if any, in the note? How do they apply? What's the purpose of them? How does it all work together? These are all things that you need to know and track. These are all things to think about. This is not simply you meet somebody at a RIA, they seem nice. Oh, she seems friendly. They sound like they know what they're doing about. I guess I'll tell Midland to send them $100,000. No, that's not how this works. Go ahead, hit the next slide. Okay. I want to talk about these three things in addition to a promissory note. I want there to be a mortgage or a deed of trust. Why? Because that means there's collateral securing the note. I want there to be a personal guarantee. That means I want there to be a carbon-based life form, a flesh and blood human being, not some LLC, that is personally guaranteeing with what they own now and with what they will acquire in the future, the repayment of the money that's being lent. I want to make sure that I have a lender's title policy that is ensuring that my loan and my security instrument is recorded in the correct place at the correct time in the correct position. I want to make sure that that my IRA, custodied at Midland, is also a named insured or a loss payee on the property and casualty insurance on the property. I want to make sure that they bought a 1-year policy for insurance before we close the deal. Here's a question from Tim. If you have invested in a property which is going to be sold in the next month and the notes are being held by an individual who has the property in an LLC, can I put a lien on the property to make sure I get paid? So you have invested in a property. I don't know, did you lend money and not get a mortgage or not get a deed of trust? Can I put a lien on the property and make sure I get paid? If it was a loan out of your IRA, the only way you can put a lien on that is for the borrower to sign a note. A mortgage or a deed of trust, and you'll get it recorded. If you didn't get it at the time, they may not want to. You personally can't put a lien on it in your name. So you're kind of hamstrung there. It's got to be a lien in the name of your IRA. So yeah, not good. Have I heard Marsh Raddick? No, I have not heard of that company. So let me move back to my slides here. Before you fund a deal, can you explain the deal in 2 simple sentences to where an 8-year-old could understand it? Bob is going to loan Tom some money. Tom is going to buy a house, fix it up, and sell it, and pay Bob back. Good. Is the deal commercially viable? Am I comfortable with the person who's borrowing my money or managing the deal? Because ladies are given a gift. Ladies, you've got a gift. It's your gut instincts. You can have that feeling that something isn't right. And man, dudes, when your significant other, when she says, I just don't have a good feeling about this one, listen. I didn't, and it cost me 6 figures. Okay. Is there a clear explanation of how much money is needed for the investment and how it will be used? Does your borrower have the purchase and sales agreement? Do they have a detailed scope of work from a good contractor so that they know how much it's going to cost to buy, fix, and hold the property and get it ready to sell? Do you have all that figured out? Does your borrower have that down? If so, does that total sum of money come in at or below what your max LTV is? Okay, this is a deal you can move forward with. Speaking of moving forward, let's kick another slide forward. All right. Okay. This is where we should almost have a graphic of a soapbox. Okay? Because this is my soapbox. Never, never, never write a check. Never, ever, ever instruct your custodian to directly fund the borrower, the offerer, the managing investor. No. Money always goes to a title company. Money always goes to a licensed, bonded, insured third-party intermediary. Always send your funds directly to the attorney or title company doing the closing, along with written closing instructions that you, the account holder, have approved, that you and your counsel have collaborated on. Insist as part of the closing instructions that the borrower has title insurance, that they pay for a closing protection letter for your benefit, and that they provide proof of property, casualty, and hazard insurance paid at least a year up. not a binder. I want proof that it's been paid for a year. I want to know that I want to see the deck page of the policy. Now, if the deal never closes, they can go get all their money back because there never was an insured interest. But I still want that kind of information because I want to make sure that I'm protected. All right, so this is where we wrap this thing up. There's a little bit of my contact information there. Email address, you can get a hold of me that way. That'd be the best way to reach me because guess what? Right now, there's no one in the office. And by the way, that phone number is not even correct. It's actually 599-2827. So that's a typo that slid through. Sorry about that. But the phone number is 599-2827. So the email is the best way to get a hold of me. If you want to retain my services and anything related to what we've talked about, I would like to take a couple of questions after we take a real quick break. How do I pronounce the city? Rick, great question. I pronounce the city like it's supposed to be pronounced, as the French Canadian Indians did. Conneaut. Conneaut. So yeah, good question, Rick. Thank you for asking it. If we could just kind of like, I'm going to mute my mic for about 90 seconds, and then I will be ready to take some questions.
Okay, great. And I'm going to stop sharing for a moment. I'll fix the phone number and put it right back up, and then we'll take questions in a couple minutes. All right, so if you do have questions, go ahead and start typing those in. I know that Jeff has been answering a few as we go. I wanted to address one of our clients in reference to an individual telling Midland about a payment. Only qualified companies can be a servicer. So like Jeff said, you can actually be the servicer, maybe for a simple deal. If the how can the individual tell Midland what portion of a payment is principal versus interest? So that amortization schedule is something that should be given to Midland as a guideline, but Midland is not a loan servicer. And so when a payment comes in, we are probably using the record keeping from previous payments, and we'll just move right along reporting principal and interest according to account history. And we will use the amortization schedule as a reference, but if you're not comfortable doing it yourself, then you are going to want to use a licensed loan servicer. So you can service it and you can direct Midland on how you want those payments to be applied, just to clarify. All right.
Great question. All right, let me do this. Folks, you might have heard a hard edge in my voice, and that hard edge was there for two reasons. Was hustling to get here today, hustling to get back to my table and get this going. But the second thing is, even this morning in my email box came another email from a IRA account holder that has lent hundreds of thousands of dollars from his IRA, his spouse's IRA, his kid's IRA, and he's afraid that none of it is going to be paid back because he never followed these things we just talked about today. He never made sure that the loans closed at a title company. He never made sure that he had title insurance. He never made sure that the mortgages and deeds of trust were recorded. He didn't do those fundamental things.
Yeah.
And that's why you hear that hard edge in my voice, is because hundreds of thousands of dollars from one person, and I see it probably once a week, maybe once every 2 weeks, somebody's lost $100 or more $1,000. And that starts to weigh on you as these people come to you and they go, how can you help me? And they look at you as if they think you're going to fix my years of making mistakes. And I can't. And it hurts. And I don't want other people to do it. All right. So a couple of quick questions here. Where are my clients located? My clients, I probably got clients in 45 out of the 50 states of this country. I think I have a couple outside of the United States in various U.S. territories. Regarding a question as keep track of any changes or lapses of cancellation, if you're listed as a named insured or a loss payee, preferably a loss payee, you have to be notified by the insurance company of any cancellations, lapses, and so on. And you have the right as the loss payee to pay out of your IRA to then have the policy instated, continued, or reinstated.
I got one more question for you, Jeff. What fees are typically associated with using an attorney to draft the note?
I'm not going to give you typical. I'm going to tell you what we charge. We charge a due diligence fee because I won't let my clients put money out unless I know it's a good deal. So we'll put a couple hours of my time into due diligence. And so we'll get a due diligence report done. And then I've got the doc prep fees for the note, the mortgage or the deed of trust, the closing instructions, the personal guarantee. So all total, you're probably looking at, for due diligence and my costs, you're probably looking at about $1,200 to do all that.
Okay. I have not seen any new questions come in. I will, let's see if I can go back to your contact information. I'll leave that up just for another few minutes. And if you need to get going, Jeff, oops, thanks so much for your time. Thank you for your wisdom and knowledge and for your time, most importantly.
Well, my pleasure.
And
John,
John,
the question is, I can work with IRA accounts that are doing deals in almost all 50 of the states. There's a couple of states that I don't like you doing deals in, but that's it. Do I have any training on this? Gene, that's an interesting question you asked me, my friend. Just years of experience, years of experience, Gene. Doing it the hard way and going from there. So, yeah.
all right, well, thank you again. So folks, I'll leave his contact up just for a couple more minutes before disconnecting. Jeff, again, thank you so much for your time. And thank you everyone for attending.
Thank you. My pleasure. Peace. Stay safe, everybody.
Okay, thank you.